Thanks, Kirby, and thanks everyone for coming out here tonight. Really excited to have you as part of the Startup Grind community. I'd like to give a thanks to some of our sponsors, including the Alley powered by Verizon, who Kirby just presented about. We also have Brex as a sponsor. They're a corporate credit card for startups. Basically, they use or they streamline the funding, the credit card application process, and allow funded companies to use their the funding they got from investors as their proof of application that they can go out and get a credit card and be able to have the same corporate benefits that a larger business has. We're actually going to have their founder, Henrique, present next month as he's flying into Boston to do our Startup Grind event. So we're really excited about that. One of our other sponsors and my partner here, Kirk, is with Sandsbull, who's another startup consulting company helping early stage companies through the growth stage with a variety of options that help you kickstart your company. My company, Prepare for VC, is a sponsor helping. We consult with early stage companies, preparing you for venture capital or angel investments by creating pitch decks, business plans, and other fundraising material. And some of our global sponsors include Oracle, Silicon Valley Bank, and Google. And with that, I'd like everyone to give a warm welcome to Mick Williams, the president and founder of the Boston Harbor Angels, who's going to be our panelist here tonight.
Thank you. Jason worked with us at Boston Harbor Angels as an intern when he was going to Babson, and he did such a great job, he stuck around. So he's been a very important part of our process as far as sourcing deals, and he's obviously learned a lot about early stage startups because he's been working with them for 3 or 4 years now at least. So anyway, I'm happy to talk about whatever you all want to talk about, and I'll talk about what my thoughts are, and Jason will probably lead some questions.
Yeah, thanks, Mick. I just wanted to start off with, Boston Harbor Angels has become one of the most successful angel groups in the country. Just for those in the audience that might not be familiar with the format, could you go over sort of how the group is run and sort of what differentiates an angel group from your traditional venture capital firms or angel investors?
Well, it's run very, very well, I have to admit.
Of course.
Because I don't do anything. I have a lot of help. But anyway, no, we've been in business, I think, 14, almost 15 years, and we've funded well over 100 companies, and I lose count. But basically, what we do is we are a forum for companies to present their wares. And we have investors. We fill the room with people who can write checks. And hopefully, those people, you'll be able to talk them into writing you a check. And we get maybe 50 submittals a month over the transom, just come in from our members or from the internet or from friends. And from that, we select 8 companies to go to a screening where we give them close to an hour face-to-face with our members, the screening committee, with the idea that we're going to help them figure out what their business should be, how they can present it well to our group. So it's a coaching counseling session. And then we pick the best 4 from that 8, and they come to our regular meeting where we'll have 60 plus investors in the room who are generally check writers. We've never had everybody in the room write a check. If you get 15 or 16 of our 75 members to invest, that's good. We've had as many as 35, in some cases more, but that's very unusual. And so we have a kind of a interesting format. In fact, you're not required to invest, so our members don't have to invest. why would you come if you didn't want to invest? But it provides a very interesting, fertile place for people to discuss their businesses. And they get feedback, ask hard questions, and hopefully they learn from that. I can keep going, but
Yeah.
go ahead and stop. And
Thank you. Yeah, and I know you're traditionally you were a real estate investor. How did you sort of get into the angel investing space, and how did that lead you to founding this organization?
Well, I was in the real estate business for, I can't remember how many years, but basically I never liked the real estate business a whole lot. It was good to me, and I was pretty good at it. And I started with a company called Coldwell Banker, which was a West Coast company that was moving east. And it was a small company. It was a partnership when I first joined it. And you had a question, you went down the hall and asked a partner. And then when I ended up running New York, I had policy manuals that were about a foot thick each, from everything from what color the ashtrays to, to everything, single thing. So it really got to be a big company. Sears bought us in 1982. So we were a successful startup, and then I was started out as a salesman in Los Angeles and in San Diego selling apartment houses and industrial properties. Then I moved to Arizona to run an office in Tucson, Arizona, which I did for 8 years. And I started buying, I like old and ugly real estate. I want to be the low-cost provider on the block. So industrial people they like apartment houses. They like things they understand, houses. But industrial I really liked. And so because the tenants didn't call you on Saturday night and say, come fix the toilet. And so that's the way I started in the business. And I ran I ended up being a senior vice president on the board of Coldwell Banker Commercial Group. And I opened up New York, New Jersey, and Connecticut and had 8 offices and 250 salesmen. And I took it profitable in '86, which was the right year, because the next couple of years got a little tougher. But I had left to run another company, a land company in Arizona and Colorado. Then I was a consultant, and when you're unemployed, you call yourself a consultant. But I did have people pay me money to tell them what I was thinking. Then a friend of mine called me from Portland, Oregon, a guy who was on the board of Coldwell Banker with me, and I was in New York, and he called me up and he says, I got this company I really like a lot, and I want to invest in it, and I want you to look at it with me, and help me raise some money. So it was the Keiretsu Forum had a branch on the East Bay in San Francisco. So I went there, and I think there were 8 companies that presented, or 7 companies, and I liked all of them just as well or better than the one that he had me come up and see. So we didn't invest in it, but I said, I really like this. I think this is really fun. It was, a Socratic, interchange, really fun. And so I said, gee, I want to do this in Boston. So he said, no, you don't. It's too much work. It's crazy. So anyway, long story short, I opened up a Keiretsu Forum branch for about 6 months, and then I switched to, we couldn't do what they were doing. It was too restrictive. And so I formed Boston Harbor Angels. And so Boston Harbor Angels has been going on for a long time, 14 years or so. It seems like yesterday.
And
Go ahead, man. I'm sorry. I can ramble.
And how did you go about recruiting some of the early members to join the Boston Harbor?
Well, Henry Kay was my first member. Who's speaking, I guess, next meeting, you said? Did you say that?
No, different.
Oh, all right. I thought you talked, anyway. Henry Kay was with Boston Scientific, and I was invested in the old Raytheon headquarters off Route 2 in Lexington. And it was a huge property, 100 acres, a lot of buildings. And so it was vacant when we bought it. And so I used the boardroom to hold my meetings, which is pretty impressive. It was a huge building, ceiling twice as high as this, and huge room. And so people, I think, just came to see the room, a lot of people. But anyway, so we started doing that. We funded a few companies, and we had a couple successes. And one thing leads to another. It was not easy. It was very hard. Will the companies show up? Will the investors show up? And so, you're always kind of nervous until that happens. But it eventually worked, and the momentum now is pretty strong.
And have you kept a pretty consistent idea of what you're looking for in a startup over the years, or has that changed, over the last 14 years?
I'm really not. I don't believe in due diligence on the people, but not on the companies, because most of the companies will pivot. So you did a whole bunch of diligence over here, and the company ends up going over here, and you don't know anything about that. So I don't put a lot in due diligence. Due diligence on the people, I really believe in that. Did he really graduate from high school where he said he did? That sort of thing. So we do checking on the people. And some of our members are very interested in doing a lot of deep due diligence, a deep dive, so to speak. That's not for me. But the only way, people say, well, how do you know it's enough due diligence? So when you write a check, it means you've got enough due diligence. If you don't write a check, you didn't get enough due diligence. So from my standpoint, I'm a little bit of a gut guy. I go on my gut. And I'm in 30 some odd deals. Probably 12 will never see the light of day again. I've had 4 huge successes where they're 11x or better. And I've got 5 or 6, horses in the stable that still look good. So I'm way ahead of the game. So I've been very fortunate that I've been involved in all of the major successes that Boston Harbor Angels has had. We've had some kissing your sister stuff, but we basically have had 4 really good hits. And our first one was a company called SmartCells, which was bought by Merck for $500 million. We had less than $10 million in it. Unfortunately, we only got 100 and something million on the front end, and then we had milestones that we were unable to hit. But it was still 11x for me, so that you don't complain about those. Then we were early stage in Carbonite, which most of you probably know what happened to Carbonite. Went public, and so we did very well with that. We had another company called Eris. The next one we had was Corbus, and Corbus is a company that's on the NASDAQ right now, and the stock, it's $4.93 today. It was $9.45, 4 months ago or 6 months ago, and it's supposed to go to 23, but we're at 70 cents, so we're big winners no matter what happens. And I'm not selling. And my banker, Saba, he keeps it for me. And so anyway, then we had one called Eris, which is a really fascinating story. A company called Eris out of Andover. Eris was enterprise software for product lifecycle management. And probably some of you know what that means, but in any event, I didn't know what it meant, but it seemed interesting. So I invested in it, and that company, the VCs had put $17 million into the company. And we did the reverse thing, and we'll talk about VCs in a minute, but we did the reverse thing. We crammed down the VCs and gave them 8% of the company for their $17 million, and we bought into the company at like a little over $2 million. A large private equity, $35 billion private equity company just purchased majority interest in the company for over $200 million and put in $40 million. The calculation, there's a lot of dilution that's happened between 11 years since ago when I invested in it, but it's still a huge winner. Who knows what the calculation will be, because when a private equity company buys a company for $200 million, they don't think it's worth $200 million. They think it's worth some multiple of $200 million. So I think they must think it's $1 billion company. So that makes me really smart. So anyway, so I'm not selling that one either. And we have some other very, very interesting ones that we're looking around. eSight's very interesting. It's glasses that allow blind people to see. We have a company that was sued by Capitol Records, which it's great to be sued by big companies, but it's been floundering for a long time. And it's a company called BriDigi, and it's in the Second Circuit Court of the Second Circuit's Appeal Court in New York right now. We lost the case. Capital won. We appealed. The appeal was accepted, and we have a whole bunch of people supporting us on our appeal. And it's a company that allows you to transfer digital copies without violating the copyright laws. Capital said, yes, you're violating the copyright laws. But what it actually does, it's out of MIT, the science, and it allows to trickle the bits go trickle from your computer or whatever to the cloud. So there's never two copies. There's only one copy, never one whole complete. There's only one whole complete copy. So we think, and everybody says, that we have a good shot of winning that case. If we win that case, that could be our biggest success, and we have about 40 of our members are in that deal. So that's a lot of us are, and it's ugly because it's been bleeding, and lawyers are expensive, and so anyway, go ahead.
And yeah, and you had mentioned, you look first and foremost at the founders. Is there anything?
I didn't say that, but that's right.
Or something along those lines. But
I do diligence on the people.
Yeah, diligence on the people. Is there anything in particular you saw in that group of companies that stands out from other founders you've seen or had invested in?
Well, yes and no. And just to explain, the SmartCells was a young man, Todd Zion was his name, and Todd had not graduated from MIT, but was in a doctor program there, and he was working on this technology, so we did have a license with MIT, and again, he was a young guy, untested, untried. We knew he was smart. He worked hard, so we liked him. And so the second company, Carbonite, is pretty simple. David Friend has had somewhere between 6 and 8, successes, big exits, and so he's like the poster child for a serial entrepreneur. So that was an easy one. You bet on him. And then Eris, just nice guy. Who was very smart technology-wise, and then Corbus was another medical deal. So we've had successes in 2 medical and 2 technology deals. So we like everything. So go ahead.
Yeah, and as far as is there a background on the team or founders that you prefer, whether it's technical or sales or another aspect that they're really strong in?
We always like to see a team that's worked together before. We don't see that very often. And people say, what do you want? Well, I want a bulletproof IP. I want a team that's done it before. I want to have customers who are willing to pay money for whatever it is. And we don't ever see that. We don't get them. Those people are already gone. They got too many investors. So every company we see is flawed. It has some kind of flaws in it. So we try to help them with their flawed areas. And we've removed the CEOs several times of companies we've been invested in. And so we're willing to be a little hands-on, although some members are, some members aren't. You do what you want. Of course, they say that the founder is really the key, and that's really true. But the founder can't do it all. Some founders can, but very few can. Most of them need a team. And so if they need a CFO or they need a marketing guy or whatever, we'll try to help them with that.
Yeah, and along those lines, most frequently angels or other investors are getting updates when something bad happens. What's your philosophy on keeping your investors updated, and how can or what sort of?
It doesn't make any difference what my philosophy is. It's up to their philosophy.
Yeah.
And when things go well, you seem to have better communication than when things are not going well. And there's not much you can do as a minority investor other than yell and say we want more reports. But it's always better to keep your investors informed, particularly if you're going to come back for more money. Because if they think you're being honest with them and dealing with the problems and recognizing the problems, then they're more liable to give you some more money.
And I know we've touched on some of the successes you've had and with Boston Harbor Angels. What are some of the failures, and is there anything that could have been done differently on the company?
Oh, there's a lot of stories in the big city.
Yeah.
We've had, a lot of things happen to us as investors, and we're never a majority owner. We're always a minority owner. But we, look sometimes for a seat on the board or a seat on the advisory group. And those positions can be very helpful for some companies. And you really want someone who really leads. And if he's doing a good job of leading, you don't have to do a whole lot other than kind of give him some advice. And again, it's every situation is different. The failures we've had, some of them are predictable and some of them aren't. That usually they misjudged the market. The marketing didn't work. The dogs wouldn't eat the dog food, and so those kind of things happen. And there's a lot of those stories. Right. And we're either, like I said, we're looking at new deals every month, and so I'm kind of a one and done guy. I put money in usually in the first round. I've done second and third rounds before, but typically I'm one and done. If they haven't hit their goals and hit their milestones, then I just soon get a new bet on the table where I have a moonshot as opposed to stumbling along and fumbling along with something that hasn't worked very well. So everybody has different theories. Some people say I make the most money on the second round or third round because there's cram downs and that kind of stuff, and therefore you're buying it cheaper. That's not what I try to do. With Carbonite, I went 3 rounds, and the rounds were, the first round was $6 million, the second round was $9 million, the third round was $14 million, the fourth round was $120 million. So I didn't invest in that round, but I was very happy to see the VCs paying $120 million for the company. And the round after that was $240 million, or $220 million. And that was $20 million in at both those, $20 million at 120 and 20 in at 220 million. And the company went public for $330 million. So the last guys in, you don't know what money it was. It might have been their last money in a fund, and so they got a quick return on it. But they didn't go in thinking it was, I thought we had $1 billion company. And unfortunately, the public markets didn't feel that. They thought it was worth 330. And so it worked out great because we were in very cheap, so.
Right. Yeah, and then I guess for some of the earlier stage companies here, that might be a little before the angel round, what's sort of the best best advice you might have to get to a certain milestone where they can go out and raise funding from a group like Boston Harbor Angels? Well,
I think there's no rules. We don't like science projects, but we've invested in a few. We like, clear-cut customers determined, and we like sales, but we often invest when there's no sales. So, there's really no rules, and it's, my rules are different than everybody in the room has different rules. So my rules are my rules, and they're really not rules, they're just what I think about. So I think that, you can go after money any place you want, any stage you want. Generally, we'd like to see the principals have some skin in the game. So we want to see them having some real money, if not real money, real time. And we'd like to see them have friends and family in the deal, because if you'll sell it to your mom, you probably like it a little bit. And so maybe not, I don't know. But in any event, there's those things. It's hard to say when's the right time to come to us. The right time is when you come and present and you get money. The wrong time is when you come and present and don't get money. So I don't know how to define it much better than that.
Okay. And are there any sort of other investors you look to see if they've gone into a particular deal, like it makes you even more interested? Or?
Yeah, of course. There's people in the room who are technology people. There are people in the room that are life science people. And if they're smart and successful, you'll follow them. Like Jeff Arnold is in our group, and he has a big following because he's put us in some very interesting deals. Now, I haven't followed him on every deal, but I've followed him successfully on Corbus, and he was also in SmartCells, but he was not the lead in SmartCells. But anyway, so yeah, and in technology, we have some technology guys who are clever, and so you know, I a little bit follow the group. I'm usually the last person in because I don't want anybody to be influenced by my putting money in a deal, because I don't think that they should follow me. So I'm kind of the last one in. I go in at the last after pretty much everybody's invested. Not always, but most of the time.
Yeah, you in particular, like you like to do one and done, except for some exceptions. Do you, you know, do you like to see the companies coming back for another angel round from the group or venture capital financing?
No, I don't like to see them coming back. We'd like to put money into a company and have a point, an inflection point where they can either get an M&A, IPOs are very rare, but get something happening as opposed to coming back up for us for more money, unless it's understood in the front end. If we hit this milestone, then we'll come back in with some more money. Hit that milestone, we'll come in with some more money. We make those deals, but typically I'd like to see them get enough money in the first round to get them to someplace where we can get out, because our goal is to get out as quickly as possible. We want to be in and out and get another deal. So, you know, the time frames have been as many as 11 years and as short as 5 years on my exits, the 5 I've been on. I don't go into an investment thinking it's going to be 5 years before I get paid. I'd like to have it 18 months, 2 years, 3 years. I haven't had one of those yet, but I'm looking forward to it. And when I go into a deal, that's what I want to see. And if I can't see someplace that's pretty clear that I can get my money back, I'm probably not going to invest.
All right, perfect. Yeah, so I'm going to open it up to questions from the rest of you. Yeah.
Introduce yourself and tell me what you do.
Absolutely. I'm Akhil. I'm also from Jason's alma mater. I'm from Babson. So I just graduated 4 months back from my MBA program. After which me along with my partner.
We should be up here giving the speech then.
We started our own venture where we help out small and mid-sized family businesses and companies grow in and around Wellesley and Greater Boston area for now. So that's what we've started, kind of like the McKinsey for the small businesses.
Okay.
So I've been very fortunate to be part of one of the Boston Harbor Angels meeting I was invited as a guest. It was very interesting to see not exactly the entrepreneur's pitch, but what happens after they leave the room and then all the investors start talking amongst themselves. That I thought was the most interesting part of the whole experience. So one example or one incident that happened was one of the entrepreneurs presented their idea, which was fantastic. At least on paper, they had great sales, they had a great entrepreneur, very charismatic, very strong, very confident. And then once the discussion started, once the entrepreneur left, everyone was very excited, everyone wanted to know more, everyone wanted to discuss more. But then suddenly one of the investors said, oh yeah, I spoke to this entrepreneur, but he is not really coachable. And that's the only thing he said. And after that, you could see a real decline in the discussion or the excitement or the energy in the room. So don't you think that is kind of like counterintuitive to what you would expect from an entrepreneur? You would put money in. Don't you want the entrepreneur to be headstrong, confident in what he's doing and continue to do so?
Some people do and some people don't. I think I remember which one you're talking about, and a very influential guy in the room sandbagged him, so to speak. Not really, but if you looked at the checkoff sheets when it came back, people signed up for it. There were still 15 people that signed up for that company. So he didn't discourage everybody. He might have discouraged a few. And we're also good at piling on. If a company gets some attention and some action, other people will follow just because they want to get on the bandwagon. But it is interesting how one person can change a group. And I've seen it work both ways, where nobody was interested and then the right person said hello and all of a sudden everybody's interested. So any event, it's really, it's hard to say, but we're all independent thinkers. And so if we're influenced by one person, that's okay. Not everybody's going to be influenced by one person. But I try, if it gets to be too much going one way or the other, as leading the group, I try to say no piling on, or let's break up this love fest. Let's get this thing. And I try to come up and keep things kind of an even keel, as opposed to letting it get really down. Because this is, in 10 minutes, you can't tell your story. And you got to get to the next level of due diligence to really figure out if this company is worth investing in or not. Please.
Yep.
Jason, call him, yes.
Keith Summers, co-founder at a company called Health Forum. We do healthcare benchmarking, and our main goal is to help hospitals and other healthcare stakeholders hire and retain the right people. So hiring the wrong doctor and having turnover is very expensive. We're trying to solve that problem to give them more information.
A noble cause.
So my question is, when we approach an angel investor or a group, are we talking valuation right away, or what we're looking for? Because I'm worried about scaring off people if the valuation might be too high, or.
Well, then you want to lower it.
Right, but do most people start out with the valuation in mind, or do you either pitch, say how much you're looking for, and then discuss the numbers after?
It's a very good question, and there's no right answer to it. Again, when somebody comes in with a ridiculous valuation, we may discard them because of that.
Yeah.
If we like the company a lot, we will generally come see it. If the company has an interesting story and have something, we'll listen to it. And the valuation is something that's negotiated. And so you may have a valuation that we think is high or we think is low. You could be either way. If it's too high, nobody invests. If it's too low, everybody invests. I mean, it's so there's a fine line there. And if you want to raise money, keep your valuation reasonable, and it has to be based on something. Somebody else told me it was worth $5 million. Great, but you have to look at it and say, do you have customers? Do you have paying customers? How much does it cost to acquire a customer? How long does it take? What's your sales cycle? There's a whole bunch of things you can calculate and say that's a reasonable valuation or that's unreasonable. But we're here to help. We're very helpful with valuations. And we're not, we want you to have plenty of incentive. We're not looking to run the company from the standpoint of that. We're here to help, and we want to see you come up with a reasonable valuation. And you got to think about the next round, if there is a next round. What's this valuation going to do the next round? Because there's nothing worse than a down round. That's the kiss of death. So be careful on your valuation, and be able to substantiate it. Why is it worth that? And not because I believe it is. It's got to be a little more tangible than that. Good question, though.
Yep. All right.
My name is JJ O'Brien. I recently transitioned.
JJ, yeah.
Yeah, we talk. I recently transitioned to start up to a hobby business. Now I'm looking for an opportunity doing business development and product strategy and sort of. So that's what's going on. But my question, I know that when you spoke about some of your success investments, you said you're not selling, you're pretty bullish on it. I'm wondering, what kind of mechanisms do you use to hedge those investments to make sure that were that 450 to go down to a 50 cents per share, that you make sure that you don't lose that entire investment? Yeah, I know that there may or may not be options, but what is your personal strategy?
Well, if I like it, I hold it. If I don't like it, I sell it. But basically, I don't know who's going to tell me more than what I know about the company. The stock market, every day is a different bet.
Well,
So
I'm not even talking about
I don't hedge my bets.
expected valuations. I'm just wondering if there are, if there's any, and maybe you don't use it, but other angel investors do. Are there mechanisms to help hedge some of that risk?
Well, generally, we're not in public companies. We're usually in companies that are not haven't had an IPO. We've had 2 with IPOs, just interestingly enough, but that's not the standard. The standard is we have just shares in a company, And there may be a secondary market, but probably not. The secondary market may be in the room. Maybe I like your company, I'll buy your shares out of the company. But as far as hedging, my hedging is I go invest in another company. So that's, I don't try to figure out how to hedge, and I'm not sophisticated in the stock market. So I know there are ways to do those things.
Yeah.
Hi, my name is Dimitri, and I'm doing data science, like developing.
I'm sorry?
Yeah, developing different algorithms for data structure and robotics, math, and code. My question is, if we're going to take, as an example, according to your experience, what would you advise? Never try to avoid or never follow in your presentation some kind of a downside of any things that you've been pitched and you actually denied that application specifically for a particular reason. And what would you recommend as the
I'm not sure I understood that question.
So, like things not to do in a startup presentation.
Okay. That's his job. That's his business.
according to your experience, what is the most common mistakes startups do so they would never succeed in pitching or in operational activities?
It's an interesting question. I don't really have an answer because you see some horrible presentations that raise money. You see some unbelievable presentations that don't raise money. I don't know why, but that just happens. The people, there's something going on, the charisma of a person, their enthusiasm, their whatever, and they might have a horrible presentation, but they still raise money. So I don't think there are any particular rules that need to be done, but your presentation, you should do it well and do it often and do it, in front of as many people as you can and listen to the feedback. And we want people that if they raise a flag and charge up the hill, we want to see somebody following them. And if they don't have that leadership and that ability, they better find somebody who has that and then go along with them. And not everybody has it. I've written a couple papers and talks on, champions are born, not made. And it's unfortunately, I think it's true. You can certainly move up from a B to an A or from a C to a B, but you can't just become this entrepreneur without some gift. And it may be a gift of sales, it may be a gift of being able to intellectually convey thoughts or something. But it just, just like there's not many people can throw a 100-mile-an-hour fastball. There's just not many people that can do it. And so there's just not many people that can be entrepreneurs. So if you look at yourself and know yourself and do a self-assessment and say, I am that guy, because I've had, I was captain of my football team and I did this. You have all kinds of examples of where you've showed leadership and you've gotten people to say, I like what you're doing and salute you. That you may have it. Doesn't mean you do, but you may have it. But you really have to look at yourself, and that's where a team comes in to be very important. You may not have all the sales skill, but you may have the strategic thoughts, or you may have whatever. So really do an assessment of yourself. And Drucker says you really can't do it in 15 minutes or an hour. He says you have to look at yourself over a year and benchmark things that you do well and things that you don't do well. So you figure out who you really are and what your value is in a situation. And so if you don't have them, you better find somebody that does. I don't know if that answers your question. Yes.
Mike.
My call was a little distracted. We're developing solutions for commercial vehicles and telematics to distracted driving and companies enforce cell phone policy. But a quick question in terms of advice you give to startups. Would you encourage them to engage with you earlier on, maybe instead of polishing a perfect pitch? Because what you described is a lot of valuable feedback. So what advice can you give in terms of engaging earlier, maybe with not the perfect pitch, but to have a feedback process so you can benefit from that versus waiting until you kind of polish a perfect pitch?
Okay, well, I'm going to have to tell you my secrets here, okay? So I'm going to let you in on them. Basically, find a champion. Find a champion, preferably somebody with money that believes in you and believes in what you're doing, and you've convinced them to come with you and put some money in, and they have credibility in a room or in a group. I like to say you have a better chance in our group if you've cultivated one of our members and got him convinced that you've got something going on. That's the secret. Not a secret, that's a fact. You just have a better chance if you have a champion who's an expert in whatever the area you're in, and who believes in what you're doing, and maybe puts in money, maybe doesn't put in money, but if he believes in it and he has credibility, that's your first step, I think. And if you can't convince one person to follow you, how are you going to get 70 guys in a room to think about it? Good.
Yeah, and around, I know some of the companies as well in Boston Harbor have pitched, have pitched and then come back at a later point. Yeah, how does or do they usually take the feedback that they've gotten from investors, and how do they take that initial feedback from the meeting, and are they able to bring it into something they can come back a next time around and raise capital from the group?
Yes and no. No. It's really hard. When you come back for a second bite at the apple, either if you're raising more money or you never have raised any money, but we allow companies to come back and tell their story again if in fact they've achieved a milestone of some noteworthiness that we would recognize. We say, well, you didn't raise money last time, what have you done different? And they say, well, we did this and this, we got 3 new customers, or we got this or whatever. So we say, okay, well then you come back and make a presentation. Sometimes they're successful, sometimes they're not. And again, it's really hard to say, and I can't predict which companies will have success in our group or not. We're funding probably 1 a month right now. And some months we may do 2, and some months we may do none, but we don't invest in all the companies that present to us. And my criteria for Boston Harbor Angels is, first of all, I have to be interested in it. I have to find it interesting. I want to learn something. I think it's a learning experience to come to the meetings and find out what people are doing about different things. And so I think what I'd provide is a forum for a window on technology. So if I'm entertained by it, or if this is very interesting to me, I like it, that's a way to get in the door. You may or may not raise money, but you have to have something that's interesting and a story, and you have to be able to tell it well. So the companies that come back generally have to have something noteworthy that's happened since the last time they were there, or else we don't invite them back.
And around the startups you're invested in, do you subscribe to the belief that they shouldn't overlap at all, or you can take multiple bets on the same industry in the same space, or what's your philosophy on that?
Well, I'm probably a little heavy on life science. I like moonshots. I like companies that have an opportunity to really go crazy, become huge bets, because we're in a high risk, high reward business. And so I like deals that are moonshots, so to speak. And so if it's just, I'm going to make a 12%, 13% return year after year after year, well, that's why I'm real estate. Real estate does that. I'm not doing this for real estate type returns. I'm looking for multiples on my investment. And we call them X. And so if we get, 1X gets your money back, 2X is double your money. So I'm looking, and we try to look at deals that if I can't see 10X on the front end, I'm not going to invest 10X within a reasonable period of time. Very seldom do we get that. Like I said, 4 times out of the 30 I've been so far. But the idea is that you have to see a shot at it. Some people will say, some seasoned angels in around the country say, I won't do a deal unless I can see 30X. And so that's another cut. We don't see many deals that are 30X deals where you can see that quickly on the front end. But you know, this truly disruptive businesses that have been able to achieve those kind of returns, it's hard to see them because they're disruptive. They've never been done before. So therefore, how do you know how to measure it? Or you got to make a lot of bets, and you have to bet often. So it's vote early and often with your money in the angel business.
And do you usually have, you know, a vision in mind, like this company is something Google will want 5 years from now, or is it just more, you know, comparable to, like, how do you base that 10x multiple?
You know, we hope that Google will buy some of our companies. I think they have bought one of them. But basically, I think I'd rather see. I mean, that would be say yes. I'd like Google to buy the company, but I think we're looking at just in the normal course of business. What will happen to this business? If the segment's something that we know other companies in, we will hope that they buy them, like Salesforce or something like that will acquire these companies. I don't really think in terms of having a target for them. I'd like 10 targets for them.
Right.
You know, Google, Apple, you know, Uber, you know, whoever.
Sounds good. Yeah, does anyone else have any other questions? All right. Yeah, thanks for...
Do we have to kill more time? Does everyone want to go home, or what do we do here?
I mean, if you have...
you know, again, I think there is usually I'm asked about VC versus angels, and what should I do if I'm an early company? Should I look at angel investments or should I look at VC's investments?
Yeah.
And it's not a clear-cut answer. We don't like to see our companies being acquired by or being invested in by a VC unless it's at a really high level. So, because what they'll come do is come in and cram us down. So that hurts us. And if you're an entrepreneur, they'll cram you down. And chances are, if you're the CEO, you're going to get fired. So dancing with a VC is very dangerous. It can be lucrative, but it can be dangerous. You can get hurt. Angels are typically more friendly. And we don't like to co-invest with VCs because their time frames may be very different than ours. They may have a 10-year horizon on this dollar that they invested, or they might have a 6-month horizon on that dollar. Either of those, you know, may not work for me as far as when to exit, because they exit when they hit their IRR. They'll exit, even if there's a lot of money left on the table. Might be good, might be bad. I don't know. So, but you know, we think angel investing, we can raise a lot of money in our community now. I mean, we've had, you know, situations where we've raised $4 or $5 million pretty quickly. So, you know, used to be that was kind of there was the dark ages or the dark spot between 2 and 4 million or 2 and 5 million. You couldn't do that. It was not an angel deal. Now we can do that. Because we syndicate most of our deals with other angel groups. When we started Boston Harbor Angels, there was Common Angels, which now is really more of a VC, not really an angel group anymore. And Launchpad was around, and that was about it. And Boris can help me, and who else was there? Boris was one of my co-workers at Boston Harbor Angels for many years. Why are you so late, Boris? I need all the support I can get. You know, it's a tough room. Okay, well, like I said, that's, you know, the VC idea. I loved it in Carbonite when they came in late. Those were great deals. I liked it at Eris. That was great coming in at those levels. But when the VC comes in right after you, generally speaking, the last money in makes the rules. So, and typically they don't, whatever, you know, rights you had, they're going to take those away from you. And because they'll say, well, we're not going to invest then. So you can play hardball but it's not very hard because you say, okay, game over. And so the VCs, can be good, friendly, but they're really, they're fiduciaries for their investors, and they've got to work the hardest deal they can. So you can't blame them for being a snake, whatever they are. So, any other thoughts or questions? All right. Well, who
Yeah.
got their money's worth so far? Anybody get their money's worth yet? I don't know.
Sounds good. Yeah, thanks everyone.
What time?
Yeah.
What time is it?
It's 8.
What's that?
It's about 8.
Is it 8?
Yeah.
Oh, all right. Okay. Well,
I mean, if you want to,
no,
have
no.
anything else?
I'm only here at the pleasure of this group. And so if they have more questions, I'm happy to answer them. I'll stick around, talk to a few of you. I didn't bring my wallet, so don't ask me for any money. But come see us at Boston Harbor Angels.
Yeah. Yeah. Great presentation. Yeah. Again, everyone, feel free to stick around, network, ask any questions afterwards, and thanks again for coming.
Thank you all for having me. It's been enjoyable.